Hello, this is Japanese Economic Review Channel. Today, we analyze the June 2026 Consumer Price Index for Tokyo's Ku area. As a leading indicator released ahead of national data, it reveals the current state and underlying drivers of Japan's inflation. Let's start with the big picture. Headline CPI rose 1.7% year-on-year. Core CPI is at 1.6%. Crucially, core CPI, which removes both fresh food and energy volatility, shows the strongest growth at 1.9%, indicating persistent underlying domestic demand. Looking at historical context, the current 1.7% rate marks a structural return to inflation after a long deflationary era. The fundamental baseline price trend continues its steady upward trajectory, stabilizing near the 2% mark. Understanding the CPI requires looking at its weights. Housing and food combined account for over 50% of the index. Notably, a 1% increase in food prices creates over 4 times the inflationary pressure compared to a 1% increase in energy and water. What drives the 1.7% headline? Food is the overwhelming driver, pushing the index up by 1.05 points alone. Conversely, fuel, light, and water pull it down by 0.12 points. Essentially, energy subsidies are currently masking the sharp rise in food prices. This heat map visualizes price changes against economic weight. Beyond food, 8 out of 10 major categories are seeing price hikes, with transport and communication up 3.0% and clothing and footwear up 3.2%. Inflation is clearly broadening across the broader economy. Energy acts as a deflationary anchor. Electricity is down 2.0% and city gas 4.1%, largely due to government relief measures artificially suppressing headline inflation. However, recent month-on-month data shows this downward effect is gradually shrinking. Focusing on domestic demand, non-fresh food surged 3.9%, with meat up 6.3% and dining out 4.5%. Clothing also rose significantly. This indicates widespread price pass-throughs for daily necessities, continually squeezing household budgets. Specific micro-drivers reveal acute price shocks. Mobile phone charges spiked 4.6%, creating a noticeable consumer pressure point. Accommodation also rose 3.1%, reflecting strong tourism demand. These fringe movers significantly impact consumer sentiment. While the year-on-year base effect is plus 1.7%, month-on-month momentum shows prices are still actively rising by plus 0.3% across the board. Inflation hasn't flatlined. It is currently compounding, showing sustained upward pressure rather than just statistical echoes. There's a gap between structural and experiential numbers. While headline is 1.7%, non-discretionary daily life runs hotter. With food at plus 3.7% and clothes at plus 3.2%, the real cost of living is rising faster. The 1.9% core is a more accurate leading indicator. Finally, Tokyo acts as the definitive leading indicator. The nationwide June CPI will be officially released on July 24th. Expect national core metrics to mirror Tokyo's systemic heat, maintaining pressure on the Bank of Japan to normalize interest rates. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.